What's going on, everybody? We are back with part 4 of our 6-part series on how to become a market master. So in this video, we're going to talk about volume and why that's important when it comes to trading. So I'm still on my long-term chart here, but if I go to a shorter-term chart, this will really help you understand what's going on. So you see stocks tend to move up, down, and sideways throughout the day, and in periods of these gray zones, which is after hours or when the market's closed, you see it really go flat and have a couple of what we call spaces in the market here. You see these tiny gray bars here, got some here and here. That means there's no volume. So nobody's buying the current available supply of stock, and nobody's selling it either. So what you want to see when you're trading is you want to see high spikes in volume, because that lets you know that people are starting to buy or sell a certain stock, and there's a reason they tend to buy or sell, because it lines up with your fundamentals, it lines up with your technicals. It's a big factor when it comes to trading. At the end of the day, you want to make sure you're buying companies that have larger volume. You want to look at anything a million plus. That way you have plenty of time to get in and get out if you need to. Because if you don't have any volume and there's only a couple of hundred shares, a couple of thousand shares trading that day, and you're on the bad end of a trade, you're going to end up having to pay a lot to get out of that trade because nobody wants to buy your position. Remember, when you buy a stock, someone else wants to either sell that stock to you or buy that stock from you whenever you decide to sell. If there's nobody else on that side of the transaction, you're stuck holding it unless you sell it for a big discount. That's where you have this spread come into play here, and that's where sometimes if a stock is worth $200, you might have to sell it for $195 just to get out, because someone's going to have an automatic $5 edge on you if they think it's bullish, but not right now. So it's one of those things you want to focus on and understand. Make sure your stock charts move like this and not just flat. So what I mean by that is I'll type in, this is a great indicator of volume. So Tillery, TLRY, is a stock that barely trades, kind of one of those penny stocks that barely moves. So you saw it move from 186 to 191, had barely a move today. It actually moved down throughout the trading day. Had a big spike down and kind of stayed flat. But these are stocks you want to avoid, all right? Anytime there's no volume whatsoever and you have candlesticks looking like this, you never know what's going to happen. Usually they tend to crash pretty hard or rally pretty hard, and you'll miss those moves. So what happens is they'll rally like crazy, and you won't be able to get in because nobody's wanting to sell you their shares. Everybody's wanting to buy for crazy amounts of price. You'll get left holding the bag and losing a lot of money. So whenever you're looking at it, there's different indicators you can use. Personally, what I like to do, this kind of goes back to our technical indicators, is use volume profiles. And you want to be careful when you're using volume profiles, because this is going to show you basically, this is going to show you, if I can find it, this is going to show you what price levels tend to have a lot of volume. So I noticed that the 20-day 1 hour tends to have really good power when it comes to this. And what you want to do is you want to look at these spikes. First off, before you get in the trade, you want to look at the overall volume and see how many millions of shares get traded. In this case, you have like 18 million throughout the trading day on Tesla. So you want to make sure that there's actual buying and selling going on, and then you can use this volume spikes to give you a good range of where that price is. So what these volume profiles do, you'll have spikes and gaps. Usually when there's a gap in the volume profile, that's where you see a big either sell to the downside or buy to the upside. So it's a very powerful tool that you can utilize to predict breakouts and consolidation periods. For example, so if we go to the 6-month 4 hour, something a little bit longer for us, or we'll go to the year to day, see what that gives us. Okay, beautiful thing going on here. On the year to day, going back to Tesla. So remember, we drew all those lines out. We think it's bullish if it goes a little bit lower. I think we said we needed it to go to, I think right here, this area. Or maybe, let me draw it out real quick. Good thing is you can always draw these things back out. Give me 2 seconds. Y'all didn't think y'all were going to get a technical analysis part of this video, huh? Alright, so if I do this, Line that up here, and I know we put it up here instead because it is an overall uptrend, so we can count that as a trend. It just takes practice drawing these lines, guys. So understand that as we broke off of this spike here, right around that 238 level, we really started nosediving. And we won't remember that our support zone is actually right here at that 210 level to 200 level. So our zone of buying should be 200, 210 with thinking that's going to go to the upside because there's an overall uptrend using that trend line. You want to go ahead and avoid a stock that's in a gap. So this is a volume gap. You have a spike here, this is dead man land. Now stocks like Tesla, and this is the year-to-date chart, so this is something that you could ignore, you could look at. It's really more powerful when you go to the 20-day 1 hour. You notice a lot of gaps right here. So if you see right here, it sells off pretty quick. So if you're a day trader or mini swing trader, you can actually just trade volume gaps, whether you think it's bullish or bearish, and using those gaps to give yourself good entries and exits. If you look at the long-term chart, what you need to really utilize this for is understand where volume starts to pick up. So trading volume starts to pick up on Tesla around that 200 zone, anywhere from 215 to 200 it starts to pick up. It also starts to pick up when you get to that 260 zone. Now, just because it's picking up doesn't mean it's changed whether it's bullish or bearish, okay? That just means there's a lot of activity there, so there's a lot of indecisiveness on what people want to do with that stock. So once you understand that, you can go into part 5, which is risk-reward ratios.